When you think about expensive housing, your mind likely drifts to California, New York, or Florida, but rarely to the heart of the Midwest. Yet, what is unfolding in Kansas right now is one of the most underreported and fascinating stories in the American real estate landscape today. Kansas remains one of the most affordable states to buy a home, but in 2026, it has quietly become one of the most competitive markets. Homes are flying off the market in as little as 8 days, a pace that would have been completely unthinkable just a single decade ago. Inventory levels have plummeted, creating a scarcity that is driving prices upward, even in areas that were once considered sleepy, quiet, rural outposts. Hidden within this tightening market are some of the safest, best-educated communities in the country, boasting school districts that rival the elite coastal regions. Violent crime in these towns is practically non-existent, making them a magnet for families looking for both safety and a high quality of life. Today, we are going deep into the Kansas real estate situation to understand exactly why this state has become such a hotbed of activity. We will break down the statewide numbers, explore the mechanics of this tight market, and take a tour of the most desirable places to live. From home prices and crime rates to the fascinating history beneath the soil, we will uncover why Kansas is currently a top-tier destination. Let us start with the big picture, because the data from May 2026 tells a story of a market that is fundamentally shifting gears. The median sale price for a home in Kansas hit approximately $294,000, marking a 5% increase over the previous year. Zillow's Home Value Index paints a similar picture, placing the average Kansas home at $240,000, up about 3.3% since last year. Regardless of the metric used, Kansas remains significantly more affordable than the national average, which climbed well past $400,000 in 2026. This means a typical Kansas buyer is paying tens of thousands of dollars less than their counterparts in almost any other part of the country. But do not let that affordability fool you into thinking this market is easy, because the reality on the ground is quite different. In May 2026, there were fewer than 10,000 homes listed for sale across the entire state, a number that is actually trending downward. Months of supply, the key metric for market balance, sits at just 2 months statewide, which is firmly in the realm of a seller's market. For context, real estate economists typically look for 5 to 6 months of supply to consider a market to be truly balanced and healthy. With only 2 months of inventory, buyers are finding themselves in a high-pressure environment where every single listing is heavily contested. Roughly 23% of homes in Kansas sold above their asking price in May, and the average home fetched nearly 99% of its list. Homes statewide are going pending in about 8 days, a velocity that forces buyers to make life-altering decisions in the blink of an eye. In many coastal markets, sellers are currently waiting months and slashing prices. But in Kansas, a well-priced home is gone before the weekend. So you might be asking yourself, why exactly is inventory so tight in a state that has historically been known for its abundance of land? The core problem is twofold. Not enough new homes are being built, and existing homeowners are simply refusing to sell their current properties. Start with the sellers. A huge share of Kansas homeowners locked in mortgage rates below 4% during the unique pandemic era. With 30-year rates in 2026 hovering in the low to mid 6% range, those owners face a brutal and unforgiving math problem. Selling their current home and buying an equivalent one would mean swapping a 3% mortgage for a 6% interest rate. This would potentially add hundreds of dollars a month to their housing costs for the exact same house, so they choose to stay put. Economists call this the lock-in effect, and it has effectively frozen a large, vital chunk of the resale market in its place. Then there is the issue of construction. Home building in Kansas never fully recovered from the 2008 financial crisis, especially outside the Kansas City metro.